So it's December, the election has happened, cryptocurrency, the stock market are booming, and we're in this sort of honeymoon phase where everyone's kind of wondering what's going to happen next. Hey, my name is Team Lamm. I'm a mortgage lender based out of California, and in this video, we're going to talk about what to expect heading into the first quarter of 2025 when it comes to things like mortgage rates, the housing market, and how families can position themselves to hit their goals, whether it's buy a house, buy an investment property, and make the best decision possible. What I really want to talk about is what people can expect when it comes to the housing market, which is the primary market that I work day in and day out in for 22 years. We're going to look at mortgage rates first. Now, right now in December, mortgage rates are somewhere in the sixes. And the reality is affordability is still very high for most middle income families that want to buy a home. We also still have all the same fundamentals to our housing market that we've had for 2 years now. The first one would be what we call the lock-in effect, where you have millions of homeowners who bought their home somewhere between 2015 and 2021, and they have an interest rate less than 5%. And even though they would love to maybe buy another home, their family's changing, they want to move to a different side of town, get some acreage. When they look at that mortgage payment and that price tag of that next home and they look at what they're currently paying, it's not super exciting. And until we see that change, we're still facing the reality of what we call a low inventory market, where there's simply more demand than the supply available. Now, looking forward to 2025, everybody's wondering if a new president in the office is going to change that. And so I want to cover really quickly here some of the policies that President Trump has put out and how they may or may not affect your market. The first thing is cutting regulation. Now, I for one will tell you that if he can pull that off, that will be one of the best things we've seen happen in housing for the longest time. Over the last 10 years, the ways that some of the leaders of our nation have tried to solve housing was giving out grants, down payment assistance, and tax credits to the low to moderate income, making it easier for them to enter home ownership with little to no money out of pocket. And although there have been millions who have taken advantage of that, and it's turned out to be a great thing, that has been one of the main causes that's pushed housing prices up to where they are today. So President Trump is looking at this and thinking, if we can cut regulation and allow home builders to come back into the market and to replace much needed inventory to build more housing units, overall that will create more competition for sellers, which would overall bring costs down in theory. The second thing that we want to talk about is President Trump has talked about releasing federal land so that home builders can start building on federal land. Again, that's never been something that I've personally seen in 22 years. If he can pull it off, that would be something that would in theory bring costs down. The last thing that he's talked about is creating incentives for home builders who build homes for affordable housing specifically. And this is one that's really interesting. When we think about affordable housing in California specifically, for most people, that's going to be somewhere between $250,000 and $350,000. Now, the reason we don't see home builders building that type of inventory is because they simply can't. Building homes in California is very expensive. For a home builder to go out and subdivide land to create a parcel map before he ever gets a slab poured, it's multiple millions of dollars in environmental studies. And by the time he gets through that process of permitting, it could be 2 or 3 years later, and we could be right smack dab in the middle of a different housing market. So the risk is simply too high. So if President Trump is able to make an impact on regulation and create some sort of federal incentives for home builders, I for one think that will be a really good thing, but that remains to be seen in places like California. Now let's talk about mortgage rates. Now everyone knows that the lower the mortgage rate, the lower the monthly payment. And there's a lot of people right now that are hoping and praying to the mortgage gods that mortgage rates are going to come down in 2025. I have bad news for you. I don't think that's going to happen anytime soon. Now, I know that the Federal Reserve has been reducing rates in the fourth quarter of 2024, and he's going to do it again in December. But you have to remember that the Federal Reserve rate and mortgage rates are two different rates. Mortgage rates are always going to be impacted by inflation or a weak economy. So when people ask me, do you see mortgage rates going down in 2025? That's a loaded question, but let's look at the three main things that will lower rates in 2025. The first thing is going to be inflation coming down in a meaningful way. Now, I know that there are numbers that you hear about from time to time on Fox News that inflation is coming down. The truth is, it really is. But if you compare the costs of the main things that most families are paying for, like groceries, energy, gas, especially in places like California, and you compare it to this time versus 5 years ago, things are still too expensive for most families. So inflation has to come down. The second thing that will cause mortgage rates to go down, this is going to be a weakening economy. You see, mortgage rates will come down when the stock market crashes and money flows into bonds. That will happen if we see our economy show signs of weakness. Things like higher unemployment, less jobs being created. Those are things that would cause rates to come down. But if we look at Trump's first presidency in 2016, and we could maybe base what's going to happen now versus what happened then, he created a lot of things that were really helpful for the economy, and it created a really strong economy. So as we head into 2025, none of us really know what he's going to be getting done, but if I had to bet my money, I'm not going to bet on a weak economy. And the last thing, the third thing that would cause mortgage rates to come down fast would be what we call a black swan event. Now, a black swan event is something that happens that nobody expected. This would be something like a pandemic, a US conflict, or a civil war. Now, I don't think any of those things are going to happen in 2025, and I surely hope they don't. But when something unexpected happens that rattles the financial markets, changes our economy overnight, those things can create sudden changes in the financial markets, which could lower rates. So as we look forward to 2025, if I had to give you my best guess, I would tell you that we will see a gradual reduction in the 30-year fixed mortgage rate over the course of the whole year. And by the third quarter, my best guess is that rates will be somewhere between the 5s and the 6s, but I don't know that for sure. So take that with a grain of salt. So the big question that everyone has looking at 2025, if they own a home and they've been wanting to buy the next house, or if you're a first-time buyer and you'd like to buy your first home, is should I wait? Should I try to time the market? Now, I've done a ton of videos on this topic, so this is going to sound a little bit redundant, but I think it is a very important question to answer at this point in 2024. Timing the market is a bad idea. It's a loser's errand, and I'll give you a couple examples of how you can think about that. There have been people that have been waiting for the housing market to crash that I personally know since 2015. There have been people that have been waiting to put 20% down following Dave Ramsey's principle since like 4 or 5 years ago, because it takes a long time to save $100,000 for the average family. Now let me tell you about a couple other families. Family A, they bought a house in 2021. They put a little bit of money into it. They fix it up cosmetically. Today it's worth $60,000 more than they paid for it. Their monthly mortgage payment was high when they bought it, but there was a window in 2024 where rates dropped a little bit and they were able to reduce their monthly mortgage payment by $200 per month. They are in a very good position. Family B, they didn't have 20% to put down on their house. They used a down payment assistance program with no money down, and they took the risk of buying a home with no money down against Dave Ramsey's thoughts and rules. Those people have $100,000 just 3 years later in their home, and they're paying less for their home than what they would pay to rent the same house right down the street, because rent goes up at about 8% a year in California, and those things aren't going to change. Now, what does this mean as we head into 2025? Now, I want to tell you that I'm going to make a bold prediction. Home prices, I think, are like Bitcoin, and I just don't think there's enough homes, and there ever will be, to supply the growing population in America. That's even if Trump does a mass deportation and gets 13 million people out of our country that cross the border, which I don't know if that's going to happen or not, but a lot of people are talking about that. Even then, before the border incident happened, we had 15 million more families since 2008 that need housing, and we were 10 million units behind what we need to meet population demand. So with all the great ideas that President Trump has, for him to be able to pull off solving the housing issue is not going to be a small task. Interest rates are going to come down slowly. Waiting on rates to come down in a meaningful way is not going to be the best idea. And for low to moderate income families who are watching this and saying, "Geez, Chris, we agree with everything you're saying. We totally know that's true, but we've looked at buying a house and we can't afford it no matter what we look at." First and foremost, I feel for you, and I totally understand that. There's nothing worse than being a mortgage lender and sitting down with a family across the table who has done everything right, and because of inflation and the things going on in our country right now, they simply cannot find a way to enter the housing market. I get it. But what people have to do is come up with a long-term plan. And for most people, it's making more money. It's getting extra certifications or licenses, or figuring out what the scalability is in their career so they can get their household income to a place where they can afford a house, while tracking all their spending, getting rid of bad spending, and trying to pay off bad debt. A lot of people right now have credit card debt, and it's like 20%, which is killing many people's ability to even think about buying a house. But I would love to hear your thoughts or questions in the comments below. That's it for this month. Thank you so much for watching this video. And if you found it valuable, please make sure to like, subscribe, or again, leave a comment below.